What's up, traders? In this video, I will be performing a market forecast on Euro USD using smart money concepts. So stay tuned. I like to do these market forecast videos at the start of every month so that I can give you guys my outlook on Euro USD for that particular month. And I typically focus on the higher time frame so that the video has analysis that is relevant for a much longer period of time. However, today we're going to do a full multi-time frame analysis breakdown starting on the weekly time frame and then dropping all the way down to the 15-minute time frame. Now, while the 15-minute analysis specifically might only be relevant for a day or two after this video goes live, I think it will still be a nice example of how to perform multi-time frame analysis starting from your weekly time frame and then all the way down to essentially a lower time frame where you would look to execute a trade on. So we're going to start off on the weekly time frame as we always do, and with Euro USD we've essentially been in a fairly prolonged pullback period in here. You can see that we are trading within this bearish weekly range, with this being our most significant and last weekly break of structure. Price action did come in to mitigate this first well-priced weekly supply zone. However, after that mitigation, we had an initial bearish reaction off of that zone before we got another internal break of structure to the upside, signaling that our pullback phase is essentially still taking place here. Now, if we focus in on what more recent price action is doing, we can see that after this internal break of structure, price action essentially created this new bullish internal range, which we will see a lot clearer on the daily time frame. And after that range was formed, we've been experiencing this internal pullback in here. Now, price action has come in to mitigate this weekly demand zone, which sits at the extreme of this internal bullish range. Now, this is significant because if we are to see a continuation of this weekly bearish trend, realistically, this internal low will need to be violated first in order for us to get confirmation that that continuation phase has begun. At present though, the fact that this low is still in place means that our pullback phase is still in place and we could still see from this area price action trading higher. So at the moment, while we are in an overall bearish trend from a weekly point of view, the start of our continuation phase will only truly be confirmed when this low is violated. If this internal low is violated, our next area of interest would be this weekly demand zone in here. If we drop down to the daily now, you will see that internal bullish range as a current bullish daily range in here. So we have our daily strong low in here. We have our daily weak high up here, with this being our most recent daily bullish break of structure. And as you can see, we've had a very aggressive, very prolonged pullback phase here on the daily time frame. So at the moment, price action is also trading within this daily demand zone down here. You can see that it is interacting with this zone in here. Now, we did initially have, right after the zone formed, we did initially have a tap into the open of that zone before price action continued, which means that this particular area is no longer a fresh zone. It doesn't carry as much significance as a fresh zone would, but it still is a relevant zone in the context of this particular time frame. So essentially what we're saying is that this demand area in here is realistically the last place where we can see this bullish continuation originate from. Remember, at present, we are in a daily pullback phase in here, and the overall anticipation of this particular daily range is for price action to trade higher to target this weak high because we are bullish. Now, you'll notice that in here, we have this internal break of structure to the downside here, and this signals that from an internal point of view, we have bearish price action currently taking place on our internal structure. So if we are to see this bullish continuation take place, the start of that daily bullish continuation will only truly be confirmed when this internal structure shifts bullish, and that point will be after this particular high is violated. If we are to see a violation of our daily strong low in here, it will signal two things. Number one, it will signal that our daily time frame has switched from a bullish market state to a bearish market state. And then number two, it will also signal the start of our weekly bearish continuation phase, which would initially look to target this weekly demand down here, but then overall, potentially this weekly week low down here. And in terms of valid supply zones that have formed during this pullback phase here on the daily time frame, I would point out two particular supply zones. This supply up here being the first, and then this supply zone just below it in here. The reason I point these supply zones out is because if we are to see that bullish continuation towards the weekly high, these supply zones would essentially become potential reaction points for price. So areas where we could see just a small bearish reaction before bullishness continues. But for now, given that we are so far away from these areas, I would be more focused on what the 4-hour time frame is doing, because realistically, if our 4-hour time frame continues bearish, we are more likely to see this violation down here than we are to see price action interacting with these supply zones. But I felt it necessary to point them out as a nice to know. Now, I want you guys to just pay attention to this internal break in here. This is our most recent internal bearish break of structure. If we drop down to our 4-hour time frame, you'll notice that that internal break is going to be this 4-hour break of structure in here. This means that our 4-hour time frame is currently pointing bearish. And the reason our 4-hour time frame is pointing bearish is because it is facilitating the daily pullback phase that we are currently trading within. We have our 4-hour strong high marked out. We can see price action interacting and currently trading within that daily demand zone that we identified on the daily time frame. But one thing we have not had yet is we have not had a 4-hour pullback. Because we've recently seen this breaker structure, we can anticipate a 4-hour pullback to occur. The fact that we are trading within this daily demand zone is a nice positive confluence that gives us a small indication that that pullback phase could potentially originate from this area. So if that pullback does take place, what is going to be our area of interest? Well, straight off the bat, this 4-hour supply zone in here is going to be our main area of interest, our main target for that 4-hour pullback phase. We've got really nice imbalance that sits just below that area. We've also got nice liquidity that price action can grab as it trades into that 4-hour supply zone, making this a very nice area where we can potentially anticipate price action to come into before then continuing with what essentially is a bearish market here on the 4-hour time frame. Another area of interest for us is going to be this 4-hour supply in here that sits at the extreme, for the same reasons that we identified this one. Nice imbalance. We've also got some nice liquidity that sits just below the area that price can grab as it trades into that zone, and this would essentially be the second area of interest for us where we could potentially see those continuations from. Now, when you're performing multi-time frame analysis, all you're trying to do is you're just trying to establish the direction that price action is currently trading within. You're trying to identify areas of interest that price action is likely to trade towards. And when price action comes into those areas of interest, you then essentially want to be looking for a trading opportunity. When it now comes to actually looking for a potential trading opportunity using the analysis we just performed here on the 4-hour time frame, what options are available to you? You can either just wait for price action to come into this area before you look to get involved in potential sells, or as price action trades up towards this area, you can look to get involved in this pullback phase on your lower time frame from an internal point of view, your 15-minute time frame. And that means that you now have the luxury of deciding what you want to do because of the fact that you have identified direction and you've also identified an area of interest. And another important thing about these two 4-hour supply zones is that they are likely to be well priced within the new range. So if technically speaking, at the start of the week, we see price action immediately start trading higher. And if this is going to be our new 4-hour low, if we bring on our premium and discount tool, you'll see that both of these zones are going to be well priced within the range, making them high probability areas to trade from. So now that we've done our 4-hour time frame analysis, we can end off the video by looking at our 15-minute time frame very quickly. And the interesting thing with the 15-minute time frame here is that we've essentially already seen the 15-minute time frame switch bullish. We had an initial bearish break of structure in here, and then after that new bearish range formed, price action traded higher and violated what was our previous 15-minute strong high. So as soon as that violation took place, we essentially switched from a bearish market state to a bullish market state. Now, the reason I haven't said that our 4-hour pullback has occurred yet is because if I go ahead and make this break of structure visible on our 4-hour time frame, what you'll see is that this particular break of structure, when viewed on the 4-hour time frame, isn't actually an internal break. If anything, we just have a large 4-hour wick above this particular high before price action then continues lower. If you compare this 15-minute break in here to this internal break in here, which is also a 15-minute violation, you'll notice that on the 4-hour time frame, you don't actually have a candle close. And that is why, as much as we have seen a bullish break of structure here on the 15-minute, I'm not quite regarding this as the true starting point of my 4-hour pullback phase. I would much rather like to see price action trade higher from this area and give me another bullish break of structure here on the 15-minute, just to give me a bit more confirmation, a bit more confluence that yes, indeed, my 15-minute has shifted bullish and my 4-hour pullback has now occurred. The reason I say this is because what we often see in the markets is that our internal structure can switch from one market state to another market state very quickly. And this could potentially be what's happening here on EUR/USD, here on the 15-minute time frame, when we take into account the manner in which this 4-hour candle closed and the manner in which this bullish break of structure took place. However, the fact that we are trading within this daily demand zone down here means that we are anticipating that pullback. So like I said at the start of the video, obviously this particular 15-minute analysis won't be relevant for that long, probably just a day or two. But when we're looking at the 15-minute time frame, we do have a bullish break of structure to the upside, which means that we do have this bullish range. Now, my main area of interest for this 15-minute range is going to be this extreme 15-minute demand wick zone down here. You can see that we have really nice relative equal lows that sit just above the zone. Because it is a wick zone, you won't see any imbalance on this particular time frame because of the nature of the candle that creates that particular zone. But if I take you to the 3-minute time frame quickly, and if I show you that wick zone from a 3-minute point of view, you'll notice that that wick zone is going to be this candle in here, and just above that particular zone, you do have a smidge of imbalance. Another example of this can be seen at the top here. So if we were to mark out this wick zone up here, you'll notice that we don't have any apparent imbalance that sits just below that zone. However, if I drop down to the 5-minute time frame, you'll notice that just below that wick zone, I do actually have some imbalance. So if you do use a wick zone as a supply or demand zone, do know that there is going to be imbalance just above the area. It's just that you won't be seeing it on that particular time frame. So with this being my main area of interest, realistically, I would anticipate price action to come into this area, grab this liquidity, and then potentially trade higher to violate this 15-minute week high because we are in a bullish range. But I would much rather wait before I take any buying opportunities on this pair. I would much rather wait for price action to go ahead and violate this week high first, just to give me a bit of extra confirmation that my 15-minute has indeed switched bullish and that 4-hour pullback has begun. I'm essentially waiting for a confirmation entry, as it were. Remember, when it comes to entering off of a zone, we've got two options available to us. We can either trade a risk entry, where immediately after price action prints our change of character, we can go ahead and we can trade the zone that printed that, or that created that change of character. Or we have the option to wait for a second break of structure before getting involved. And by waiting for that second break of structure in here, we're essentially waiting for a bit more confirmation that this change of character is indeed valid, that it is indeed holding, and that it has indeed signaled that push. So this is essentially what I'm doing here. I'm just waiting to see another break of structure to confirm that that bullishness has indeed started. And the reason I'm doing that is because of the fact that here on the 4-hour time frame, this particular bullish 15-minute break to the upside that I've just seen isn't filling me with all that confidence. Another important thing to note as well in terms of this 15-minute time frame is that we actually have this 15-minute flip zone in here that does have potential to push price action lower, and that does have potential to go ahead and violate the strong low. Now, by no means am I saying that it will do that, but I want to be mindful of it. Either way though, very interesting stuff that we're seeing here on Euro USD. Just a quick recap to end off the video. From a weekly time frame point of view, overall we are bearish. The overall target is for price to violate this week low. At the moment, we are currently trading the weekly pullback. The reason we know that we're still in that pullback phase is because our internal structure is still pointing bullish. We are, however, currently trading at the extreme of that internal range, but a violation of this low would signal the start of our bearish continuation here on the weekly time frame. Weekly demand in here would be our initial sell target. Nice amount of liquidity that price action can grab on its way to that area. On the daily time frame, we are currently bullish. The reason we're bullish is because we are facilitating that weekly pullback phase. We are now trading at the extreme of that daily range. You can see that this demand that we have in here is a refinement of the weekly demand that we've seen. This demand zone is not a fresh zone. We did have price tap into it quite early on, so it definitely isn't as strong as it could be. But this is essentially the last area where that bullish continuation could originate from. Overall target for the daily time frame, because it is bullish, is for price action to go ahead and violate this daily week high. 2 daily supply zones present where we can anticipate potential reaction points provided we see that bullishness. The start of our daily bullish continuation phase will only truly be confirmed when our daily internal switches bullish, which would be at the moment up here, because this is essentially our current internal range, and that particular internal range is going to be on our 4-hour time frame. Our 4-hour time frame is currently bearish. We've had this break of structure to the downside, which means that we are trading within this bearish range. We have yet to see a confirmation of that 4-hour low because of what we've just discussed on the 15-minute, but we're trading within this daily demand. We can anticipate a pullback to originate from this demand zone. This 4-hour supply would be our first main area of interest. Nice imbalance, nice liquidity. This would be the first area where we can anticipate potential bearish continuations from a 4-hour point of view. We have another 4-hour extreme zone present as our second area of interest. And then we obviously know that a violation of the 4-hour strong high would signal the start of our daily bullish continuation phase. Now, if you guys enjoyed this video, please make sure that you give it a like, subscribe to the channel so you don't miss out on any future content. As always, I appreciate you guys so much for watching, and I'll see you in the next one.